What's up, everyone? We got a really good one today, and so strap in. And of course, all the OG house cats drop a meow in that chat. You're watching More Money. Let's get it. What's up, guys? You probably thought I forgot about you and didn't do the Alibaba update, but the truth is, guys, that now that I've been in the US for a couple of years now, I've actually been promoted 3 times, and so you just have to have a little bit of grace with me as time goes on, because work is just a lot busier with a lot more responsibility. But I love doing what I do, and I may not be as present on the channel as I used to be. I was publishing every day. I think those days are over, but I'm still going to try to publish as much as I can. And so let's get going with the Alibaba review video for their latest quarter. So as you can see, the stock market has, of course, reacted well with the security over the last, year to date. It's up 11.2% or 11.3%, call it with rounding. I mean, definitely not as much as the market. In fact, I think it might be in line with the market. Not really sure where the market is sitting at. The last I looked, the market was up 12% year over year. And so, I mean, not a bad performance, but of course, we're starting the year at around $75 per share. And of course, there was times where we actually went under $70 per share. That's when I really attacked the security, but you can see that it's just kind of slowly been working its way back up. And so getting into the results, what I really wanted to start with is just where their focus has been. And notice that the focus hasn't changed. It hasn't changed in a while now. And, it's still on enhancing profitability and returning capital to shareholders. However, this is the first, I would say, quarter where I'm raising a little bit of an eyebrow to the company, because although we're focusing on returning profitability, enhancing profitability and returning capital to shareholders, I want you to see kind of how they've done it. And starting with the returning capital to shareholders, you can see that they actually did repurchase $5.8 billion of securities or shares in the last quarter, which does reflect a 6.7% reduction in the outstanding number of shares. However, notice that they issued convertible notes in the amount of $4.9 billion to fund the repurchase of the $5.8 billion of shares. So that's very interesting. They do have an authorization of $26.1 billion as of the end of the quarter, but I want to point something out. Especially when you have cash on your balance sheet, using debt to strategically buy back shares when there's a temporary dip to unusually low levels is generally a very accretive capital allocation strategy, I would say. And, it's something that I would do as a CFO. But, if you take a look at the Alibaba chart, which I'm showing you here, notice that the shares are running under $80 per share all year, and their average repurchase price in the quarter, at least, just from March to June, call it, was around $80. And so my question is the use of issuing debt really worth it? I mean, if they believe that $80 is the floor, and you generally shouldn't be able to purchase the shares even at $80, then fine, that makes sense. But I don't know. It just didn't look like a situation that warranted the use of debt to repurchase shares. But what do I know? And so it just seemed a little bit interesting that they would take that strategy. Now, moving into the results of the quarter, you can see that there was some serious outperformance in the international group as usual. I'm forecasting the international group to grow around 16% this year, down from 45% last year. But as you can see, they're already outperforming that. So I might have to take up my expectations there. With Taobao and Tmall group, they're down 1%. And it's primarily because of the direct sales and others group. And so that's actually their grocery business. And I'll go into more detail on that. And then, of course, what's powering the international growth is the Sinyao business. And so that's up 16%. And then, of course, a nice surprise to all of us is that the cloud intelligence group, at least for now, is starting to pick up. You guys have seen revenue growth in the 1 or 2%, and it never really went beyond that. So a nice 6% is really nice to see. And so let's investigate all of these major areas where they saw growth. And so starting with the Taobao and Tmall group, notice that they have new segmentation. So actually in the model that you guys have access to, at that lower tier of the Patreon, I've created their current segmented revenue view to show the way that they're breaking out the company now. Notice that Sun Art, Fresh Hippo, Alibaba Health, and all of this other stuff is no longer in the China commerce business. And so it's all been broken out, which I think is better for us overall. And so notice that, the Taobao and Tmall group grew 5.2% last year, year over year, but I don't expect it to grow at that level in 2025. I'm expecting closer to 3.2%. So if the segment has grown by negative 1%, we're already a little bit behind. And just look at the value here. It is a substantial portion of the overall revenue. And so you can see here that although they are speaking about being more price competitive, really what it speaks to is the competitiveness of this segment. And one of the ways that they're trying to battle that is becoming more price competitive. However, that of course will weigh in on your take rates, which they are saying are declining. They're saying it right here. So, customer management revenue increased by 1% year over year. However, the GMV increased by a high single digit, but it was offset mostly actually by a decline in the take rate. So, you can get more competitive with being price competitive, but it does eat into your margin. So, it's a tough business. It's a tough go. One of the ways that they're trying to address is by increasing the number of subscribers to their 88 VIP. And so they continue to see double digits year over year. So hopefully this continues and it'll help the results in the opposite direction, going up and to the right. And so, what caused the 9% decline in direct sales? And really, it looks like it was planned. So it's primarily attributable to a decline in sales of consumer electronics and appliances due to their planned reduction of certain direct sales businesses. Now, recall, this is their actual stores. And so I think it's called Taobao malls or Tmall malls or something, but this is their actual physical stores. And so they're just not focusing on certain items. And then, of course, wholesale is up 16%. It is a small piece of the overall business, so I don't spend a lot of time on it. But notice that they're saying that it increased that much primarily due to an increase in revenue from their value-added services, which is something, you're seeing that they're focusing on across the business, especially with international. That's what's really been driving the international growth. Now, moving on to cloud, you can see that I'm forecasting it to grow around 3%, which is in line with where it grew last year. And so seeing that 6%, at least for this at least for the quarter at the moment, is promising, and I hope they really do carry on that momentum. Of course, it's nice to see. Now, the other thing that I do want to point out is look at the increase in the adjusted EBITDA. So that's really, really nice to see that, revenue is not only growing fast, but, profitability has increased substantially. So what's going on? And what they're saying is that the growth in the cloud business has primarily been driven by double-digit public cloud growth and an increasing adoption of AI products. So really what they're saying is that they've been focusing on the public market and, not focusing so much on the lower margin growth. And they're saying that right here. The 6% was mainly driven by double-digit revenue growth in public cloud markets, including AI-related products, which was partly offset by a decrease in non-public cloud revenue as they transition away from the low margin project-based revenues to focus on high quality revenues. And I think that's the right approach. Notice that they are making headway and becoming a preferred choice for developers. Alibaba Cloud has gained notable recognition as the cloud service provider of choice in China for AI training and applications. And then, they're saying that, and I really liked this, a couple of years ago, maybe like 2021, where they focused on this. So it's nice to see that they're finally seeing the fruits from some of that labor. So their ongoing commitment to open source development has led to widespread recognition of their large language models amongst global developers. So that's really cool. And of course, the number of paying users on Alibaba's cloud AI platform has increased by over 200% quarter over quarter. So we will see how this continues. I would love them to spend some time with us and speak more about their strategy and growth trajectory in the cloud business. It'd be nice to see this thing turn around. It never actually went backwards. At least I don't think it went materially backwards, but it never, went up to like that 30, high 20s, low 30% growth rate that we were expecting a few years ago. And so, this is a step in the right direction, the 6%. Let's see where it goes. Now with international, it's just kind of been the same story where, it's grown significantly. It grew significantly year over year last year. I did not expect it to grow at that same rate. I gave them a 16.9% growth rate But of course, when they're reporting 35% in this first quarter here, you can see that international continues to seriously outperform. And I'll probably have to take up my expectations. I won't do it now. I probably will do it at the end of next quarter if they continue to outperform, which I do believe that they will. And so overall, what's causing the 32% gain? Well, they're saying that the big, strong performance was driven by the growth of their cross-border business, in particular the choice business on AliExpress. So, similar to Prime. And they continue their efforts to improve their efficiencies and operations and investments. So, I like that they're focusing on sticky customers as well as improving their monetization. So that's going to continue to drive their bottom line. And so I'm excited to see this continue to move forward. However, one thing that I do want to point out, guys, and this is a tough situation, I guess, is that they are less profitable despite the growth. And so what they're saying is that the reason for the increased loss is due to increases in investments in AliExpress and Chendrail's cross-border business. And so I don't know if that means that they're supporting the vendors. And if they are supporting the vendors, then they're kind of playing a tough game here. And, I'm not in a position to tell them what to do, but this is something to watch. If it becomes, if profitability does become more and more of an issue, this is something that I'll have to take into account in the model. So, as much as I'm watching the cloud business for the upside, I'm watching this guy here for additional downside that we might have to model in. Now, of course, closely tied to the international business is the Cinyao Smart Logistics Network. And of course, it's just been increasing primarily due to the increase in revenue from their cross-border fulfillment solutions. So I'm glad that this thing never got spun off. I didn't even want them to lose 1% of this business. I mean, I don't think they own 100% of it, but I didn't want them to spin any more of this off. And so I'm glad that sort of got canceled. Now, one thing of note is profitability. Recall that they said they are focusing on profitability. And so I just want to point out that the free cash flow is actually much lower this quarter than the quarter in the previous year. And part of that is because net income has declined. So just keep in mind that, management might be saying one thing, but, it's important to look at the numbers. And then, of course, the other thing that I highlighted is this is something to pay a little bit more attention to. What exactly is the shareholder class action lawsuits? Is this something material? Do we have to pay attention to it? Because notice, it's a lot of money relative to the free cash flow. So something to very much pay attention to, and it's something that I'm going to spend some time investigating and figure out what's going on there. And so overall, the company achieved almost $10 per share EPS for the quarter, and that's great. I'm forecasting around 38 for the year, so this is a great start. And of course, I spent a lot of time on the Alibaba model in this video, and you can actually get into that Alibaba model by getting access to the tracker in the lower tier of the Patreon, and you just click into right here and you can get access to that full Alibaba model. And so the question is, how do you get access to the tracker? Well, you can get access to the tracker at this lower tier of the Patreon. And if you wanted to join us on a live monthly call, you can join us for these live monthly calls where we discuss what the market looks like for the securities that we're tracking on a monthly basis. There's special live courses, and of course there's a comp schedule. It's a little bit out of date right now. I got to update that comp schedule for the banking industry, but it actually ended up working out very well when the regional banks declined. There was a lot there to pick apart which banks would be exciting to invest in. So there's close to 200 of us in this community, and I'd love for you to join. And of course, let me know what you think about Alibaba's results. Is there something that you noticed that I may not have necessarily covered in the video? What are you thinking about the buybacks relative to the issuance for management, stock-based compensation, etc.? Are you buying Alibaba at these prices, or are you waiting for it to come back down? Let me know what you think in the comments below, and I'll see you guys later.